Hello, this is Adrian Day with another of our video highlights. If you'd like to learn more about the topic that we discussed today, you can watch the full interviews on our website at adriandayassetmanagement.com, where of course you can also find more information about our services. Sit back and I hope you enjoy. Thank you. When the investor stops seeing his S&P or his 401k go up month to month, then the investor says, where else should I put my money? And there's lots of places I should go. You look at international markets. International markets, most people don't know this, or a lot of people don't know this, I should say. If you look at the Morgan Stanley World ex-US Index, which is the benchmark, that went up 32%, over 32% last year, and the S&P was up 17%. The world markets almost had double the performance. Resource cycles are investment cycles. And the plain fact is that the commodities generally, and particularly oil and gas, agriculture, copper, you've had extreme underinvestment for a decade now. Extreme underinvestment for a decade. So we don't have the projects ready to come on.
Have you shifted your allocation of the types of miners that you're investing in because of these price movements?
Well, first of all, I'll answer a different question first,
Sure.
if I may.
Yeah.
Have I shifted the commodities that I'm emphasizing?
Yes.
And the answer to that is definitely yes. So we're still buying gold, but copper is relatively undervalued to gold.
Okay.
But oil and gas. Oil is the most hated commodity on the planet. And I think the narrative around oil is just plain wrong.
Right.
We're still going to be using fossil fuels in 20, 30, 40 years.
Incredibly interesting, Adrian. And something that you outlined there, of course, with oil and gas, for example, that investment cycle doesn't necessarily need to line up with the economic cycle. Of course, they interplay and they can mix, but we've had historically recessions with high oil prices.
Well, absolutely. And if oil will tend to do very well in a recession, but particularly in a stagflationary period. So you have inflation and a sluggish economy, and the oil price can often do well in that environment. But I think the thing about the oil is the narrative. The underinvestment has been so extreme because of both the narrative that we're going to do away with oil, in 10 years' time, and also because so many investors and funds, particularly more so in Europe than in the US, but so many will not invest in that sector. And so we've got the situation where oil and gas companies, until very recently, but were continuing to produce good cash flow, were not reinvesting it at all. Why reinvest in something that nobody wants? Last year, the world ex-US actually doubled the performance of the US. Most people aren't aware of that. Yeah. So last year is the beginning of that recovery in the markets. They were up over 32%. The US was up 17%, so almost double. And these cycles of relative valuation between the US and the rest of the world tend to be long cycles. 17 years, I just said, for the US, and then before that it was 8 years. But overseas markets outperformed the US, and before that it was 10 years that the US outperformed. So these cycles tend to be long. You go to look for bottom-up opportunities in markets that look cheap. The British stock market right now, for example, up until last year, the British stock market had gone nowhere for 20 years. Nowhere for 20 years. While the rest of the world was moving ahead, and of course the US was zooming to the moon. So the British market relative to other markets is certainly very undervalued. But dividend yield, the price to earnings and the price to book of a British market is one of the cheapest in the world. It's a well-established market, well-established companies. Most of the companies there are exporters, so a weaker pound is not to their detriment. So we're finding a lot of good value there. I think Britain is a place to look. Brazil is a place to look. They've got presidential elections in October. Now, the truth is that Lula, for all his failings, hasn't actually been that bad for the market. But I do think the opposition at the moment is led by Bolsonaro's son would be better. And their elections are in October. So between now and October, you are going to see political news that's going to move that market significantly up and down.
Yeah.
You just need to be ready to take advantage when you see it. But Hong Kong, cheap again, hasn't really moved, for 10 or 12 years, lagged the world index dramatically. Singapore lagged the world index dramatically. Hong Kong obviously has a huge risk that China controls it. Singapore doesn't have that risk.